Hello everyone and welcome back to the 9th episode of the S&P Saga, your weekly analysis of the S&P 500 index. The big theme for the stock market this week is the indication by the US Federal Reserve that there are no more rate hikes planned, and this gave a great boost to the stock market.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5% and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals.
Let's dive right into it for the week ending on December 15th, 2023. The S&P 500 closed the week at 4,719.19 cents, up a strong 2.5% from last week. The P/E ratio, based on current price and latest earnings, stands at 26.07, up 0.63 points since last week. Moving to the gainers, Broadcom is up $76.5 billion, or 19.6%, recovered the losses following its earnings reports 2 weeks ago as the market digests the integration of the VMware acquisition. Nvidia is up $34.2 billion, or 2.9%, on no particular news. Tesla is up $30.7 billion, up 4%, but I believe that the stock would likely be higher if it wasn't for the recall of the 2 million EVs to fix the autopilot software issues. This is a warning that was issued by the US National Highway Traffic Safety Administration. Apple is up $28.9 billion, or 1%, on no particular news. Home Depot is up $27.4 billion, or 8.4%, on no particular news. Moving to the losers, Alphabet is down $63.9 billion, or 3.7%, on no particular news. Oracle is down $27.2 billion, or 8.7%, after reporting less than expected cloud revenue on its December 11th earnings report. Microsoft is down $26 billion, or 0.9%, on no particular news. Eli Lilly and Company is down $24.7 billion, or 4.3%, due to the results of a recent study related to its weight loss drug Zepbound. UnitedHealth Group is down $17.4 billion, or 3.4%, on no particular news. Again, this week, there were no deletion and no addition in terms of changes to the index. So how to use the information that we just covered? So let's start by performing a deeper dive into the drop in performance of the losers as usual. This week, I believe that Oracle is the most interesting if the fundamentals are still sound. It's possible that the analysts were too harsh on their opinion regarding the results of the company. 10 companies will release their earnings during the week ending December 22nd, 2023. The most interesting will be FedEx on December 19th at 5:30 p.m. Eastern Time, expected to report $4.20 of earnings per share on $22.4 billion in revenue for their Q2 2024 results. Accenture will report their results on the same day at 8 a.m. Eastern Time, expected to report $3.13 of earnings per share on $16.2 billion revenue for their Q1 2024 results. Finally, Nike will report their results on December 21st at 5 p.m. Eastern Time. They're expected to report $0.85 earnings per share on $13.4 billion revenue for their Q2 2024 result. To catch up on what we predicted for Broadcom last week, you should watch this video next.